Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers all your stock-related queries. In case you're here for the first time, WhatsApp number is on your screens. That's where you send me all your queries. Don't forget to mention your name, location and your contact details when you have sent your question as well. Remember, you can also log on to our YouTube channel on Business Today. Go on to our Daily Calls Live and use the comment section there to send me your questions too, so that I can address it with our top market experts who will be joining in on the program. Today also we'll be joined by two special experts. First one will be Nilesh Jain, Head and Vice President of Technicals and Derivatives Research at Centrum Broking. He'll be joining in shortly. Also after that at 12:30 we'll be joined by Ruchi Jain, Vice President and Head of Equity Technical Research Wealth Management at Motilal Oswal Financial Services, and he'll also be joining in as well to answer your questions. Let's look at the markets first before we get on with our Q&A round. The 25,400 mark has been tested on the downside. You can see 110 points lower cut on the Nifty. We are at the day's low point. There has been choppiness throughout the course of the day that we have seen. Now most of the pockets on the markets in terms of sectors, they've all slipped into the red, barring real estate and metals. Those are the only two pockets that are holding themselves up into the green. There is a surge on India VIX too. Now it's back above the 12-odd mark, 12.06. There's a percent uptick on this one. So the volatility is rising. Remember, today is the weekly options expiry session and the volatility cannot be ruled out because of that. What's moving on the Nifty? Top movers are IndusInd Bank, Maruti Suzuki, Jio Financial Services, and we also have names like Tata Steel, Axis Bank that are up. What's down in trade? Bharti Airtel, Cipla, Tech Mahindra, Shriram Finance, and also names like Infosys, M&M, Wipro, HCL Tech. Some of the IT names ahead of earnings are seeing some cuts at this point. Let's welcome our guest. Nilesh joins in on the program with us. Hi Nilesh, warm welcome. Good to have you with us on the program. Help me understand with your fresh take on the markets, especially now we head into the second half of the trading session, which is also the expiry session. How do you expect it to pan out now?
Very good afternoon, Sakshi. Absolutely. So today, being a weekly F&O expiry for the Nifty, looks like more sort of a tepid session, and we are expecting slightly negative close for the Nifty today. Looking at the breakdown that we have seen from the levels of 25,400, we are witnessing an unwinding of the position from the put strikes. So looks slightly on a negative side. We can expect further downtick to continue from here. 25,350, 25,300 could be the range where Nifty may test those levels. So overall, it's a kind of a sluggish move today. The structure is looking slightly on a weaker side. Not expecting any major crack, but yes, some bit of a follow-up more on the lower side can be seen in the Nifty. As far as Bank Nifty is concerned, comparatively, we are witnessing a bit of outperformance, relative outperformance, I would say. But still, the structure is also looking sort of a profit taking at the higher levels. So if it breaks below 57,000, then we are likely to witness further downtick towards 56,600 to 56,500 as well. But as of now, it is important to see whether Bank Nifty manages to defend 57,000 mark on the closing basis. The chances are very high that Bank Nifty will defend those levels. This is the market where one should focus on stocks and sectors. On index front, we are likely to witness a bit of consolidation with negative bias to continue.
Okay, fair point. So that's the viewpoint on the markets then. Nilesh, we have some questions already pouring in from our viewers on our YouTube channel. So we'll start off with that and keep coming back to you for your view on the markets too. Manoj Bhai Kabadia is our first viewer on YouTube. He wants to know about Siemens and he says 50 shares हैं इनके पास और इन्होंने जो खरीदारी की है Siemens पर वो 3,060 रुपए के ऊपर है. 3,067 to be precise is what he's bought it at, and he says इस कंपनी के बारे में बताइए, इसमें रुकना चाहिए या सेल कर देना चाहिए. अगले 6 महीने तक के लिए अगर नजरिया हो तो इस शेयर पर आपका क्या व्यू रहेगा. Siemens फिलहाल 3,172 पर चल रहा है, यानी कि इनकी खरीद से ऊपर है, प्रॉफिट्स में है अभी. 6 मंथ्स तक का आउटलुक क्या होगा आपका?
बिल्कुल, देखिए नजरिया 6 मंथ्स एंड अबो का है तो मैं कहूंगा बिल्कुल यहाँ पे एक बार के लिए बने रह सकते हैं. हालांकि अगर प्योरली ट्रेडिंग के पर्सपेक्टिव से देखें तो स्ट्रक्चर थोड़ा सा वीकनेस दिखा रहा है और हो सकता है यहाँ पे और भी गिरावट इसमें देखने को मिल सकती है. स्टॉक मे टेस्ट द लेवल्स ऑफ 3,100 to 3,000 ऑन द लोअर साइड. शॉर्ट टर्म के पर्सपेक्टिव से स्ट्रक्चर वीक है. नेक्स्ट 6 to 8 मंथ्स के पर्सपेक्टिव से आई थिंक ये जब कंसोलिडेशन खत्म हो जाएगा तो एक लेग ऊपरी स्तर पर हमें देखने को मिल सकता है। उसके बाद काउंटर यहाँ से 3500 से 3700 तक के लेवल दिखा सकता है। ऑल्दो हम पिछले कुछ महीनों से लगातार इस पर्टिकुलर काउंटर में अंडर परफॉर्मेंस देख रहे हैं। इनफैक्ट ये 8-9 कंसेक्यूटिव मंथ्स ऑफ कंसोलिडेशन है, वो अभी भी थोड़ा सा टाइम वाइज करेक्शन है, वो कंटिन्यू होता हुआ नजर आ रहा है। तो सबसे पहले तो 3000 का लेवल इंपॉर्टेंट सपोर्ट है, वहां पे आप एक ट्रेलिंग स्टॉप लॉस लगाएं। लॉन्ग पोजीशन है तो बने रहें। अगर शॉर्ट टर्म के पर्सपेक्टिव से पुल बैक 3300-3400 का मिल जाता है तो वहां पे एक बार के लिए प्रॉफिट भी बुक कर सकते हैं।
Okay, got that. That's the view that's coming in. Let's take another question. This one is from one of our viewers, Ankur Modi. He says, Hi Sakshi, hope you're doing well. I'm very well, Ankur. Thank you so much for asking. The question is on Ola Electric. He says Ola shares have fallen massively from over 150 kind of levels, and I want to know whether it is right now risky to continue to hold on or buy at this point in time, or should I actually take that risk for my portfolio and enter at the current levels? Ola Electric today also has slipped below that 40 odd mark at 39.9 odd levels. Your suggestion on Ola Electric for somebody having a 2 to 3 year horizon, should one take the benefit of lower prices? I think the stock is down by 70 odd percent from its all time high levels. So many are looking at this as an opportunity. So should they be actually looking at it, or is there still a risk that one should be aware about?
See, Sakshi, first of all, just because the stock has corrected a lot, it doesn't mean that it is giving a good opportunity. You need to see the developments in the organization, in the company. So we have seen a lot of negative development as far as Ola Electric is concerned. That's the reason probably the stock is constantly witnessing this downtrend. And looking at the overall structure, I think there is further room on the lower side that stock may fall further towards 36, 35, or maybe 30 kind of levels can be seen. But it is not advisable to take any contraband in this kind of a weak structure. So better, you have better options available within the auto space where the fundamentals are good, technical structures are good. You can probably look at those stocks rather than taking any contraband in this particular counter. So as of now, it's an avoid. Till the time we do not see any strong reversal candle on the chart, any positive development, if at all we do not see, then it's an avoid. And you have better options available within auto space. Better look out for better options in that particular space.
Okay, got that. Jay Rami Reddy writes in, says, Hi Sakshi, happy Guru Purnima. Happy Guru Purnima to you as well. Thank you so much for writing in. The question is that I want to invest 1 lakh rupees and I've selected one stock, and that is Hazur Multi Projects. Can you please review this stock? Okay, Hazur Multi Projects is a stock that's now trading at around 44.9 odd levels. But if we stretch the charts of this stock, let's talk about last 5 years. This was one stock which in the year 2021 was trading at around 1 rupees, 1 rupee, 2 rupee odd. So it has been a penny stock for the longest time, and only after 2022, 2023, there has been some uptick in this stock, and there has been some sharp rallies that we have actually seen on this stock, and the stock also went up to a high of 58, 59 odd level. 63 was its 52-week high, and right now it's the low has been seen at 32 odd levels. Okay, and 1000 odd crore rupee kind of a market cap, so, and a stock which is low liquidity and a very, very risky stock at that space is what we can spot it at. What about you, Nilesh? How would you look at this stock?
Absolutely, Sakshi, you have rightly pointed out. It is a highly liquid counter, only BSE listed stock. A lot
Yeah.
of upper and lower circuits we have seen in this particular stock. So it's an avoid. Do not trade in such counters where the volatility is extremely high, and there is no clear visibility on the chart that we can expect this counter to move in any particular direction. But the overall structure is indicating that we may see this consolidation to continue. There could be possibility of a pullback move towards 55 to 60 as well, but it is extremely risky trade. If you are already holding the long position, then keep a strict stop loss at 44 rupees, and if it breaks below 44, then you have to review again, because probably you may not get a chance to exit if it start hitting lower circuits. So the structure wise, there could be possibility of a pullback, but I would advise to keep a strict stop loss and trade with the strict stop loss in this kind of scripts.
Okay, got that. I hope this has answered your question. Satya writes in, says, good afternoon, Sakshi. Good afternoon to you, Satya. Som Distilleries is the question that he has on. He says, I've bought it nearly at the current market price only and I want a short-term view on this. Can you please suggest me as to how I should be really looking forward to Som Distilleries from the liquor pack?
Let me just open it.
153.7 is the current level at which Som Distilleries is trading at. Last 1 month has been pretty lackluster. It went up in the middle of June onwards and then came down as well. So it's been sideways. Last 3 months, although there has been about a 23-24% uptake.
Right, Sakshi. So HDBL is the symbol for this particular counter. Looks very strong on the chart, but purely from a positional perspective, from a short-term trading perspective, the structure is looking slightly on a weaker side. We have already seen good profit taking at the high levels from the levels of 174. The stock has corrected all the way to 153 right now. There could be possibility of a follow-up on the lower side towards 145, 140 kind of levels can be seen in the short run. But if bought it purely from a long-term perspective, let's say if somebody can hold it for 8 to 12 months kind of time horizon, then one can stay put, keeping a strict stop loss below 135, and we can expect a gradual up move towards 175 to 180 once again. But for that, you need to keep a strict trailing stop loss in this particular counter.
Okay, fair point. I hope this has also helped you understand how to go about the stock. Let's look at the next one. This is Jay writing in. He says, thank you, Sakshi. It's a very useful show for us. Thank you so much, Jay, for writing in. He wants to know about Vedanta now and he wants to take a fresh entry here. Now, yesterday what we saw was a short seller, just like Hindenburg, Viceroy Research, that came out with a report saying that Vedanta's is having some financial misappropriations. It highlighted about how it believes, Vedanta is operating like a Ponzi scheme, and all of those allegations were sharply refuted by Vedanta Group. They called this short seller, and the report that they came out with absolutely baseless with the malicious intent too. The stock intraday only recovered half of the losses that they had incurred in the intraday basis yesterday. Today it opened on a green note, but again is seeing some softness at this point. How would you look at Vedanta, Nilesh Ji?
Sakshi, see, first of all, we need to wait for some more time. Let this dust settle down. Yesterday, the impact was seen on the back of a negative report, and today also we are witnessing a bit of a follow-up more on the lower side in this particular counter. As far as levels are concerned, from a trading perspective, 420, that's yesterday's low, is very strong support for this particular counter. If bought it, and if somebody wants to buy at current level, keep a stick stop loss at 420, purely just to play a pullback move. Now, coming to positional view in this particular stock, it's a we have seen a very good momentum in this particular counter over the past few years. And if somebody wants to buy for next 2 to 3 year kind of time horizon, then buy in multiple tranches. Staggered manner should be the approach buying in this particular counter, because there could be possibility of further correction to continue in this particular stock over the period. So positionally, we still believe that the stock has a potential to test 550, 600 kind of levels. New record high can be seen in next 1 to 2 year time frame. But purely from a trading perspective, keep a stick stop loss at 420.
Okay, fair point. I hope this has also helped all our viewers out there with their the view that Nilesh has shared on this stock. Let me look at the next one. This one is from Gunjan, and she wants to know about two stocks: Ashoka Buildcon or Ashok Leyland. Infra vis-a-vis the auto part, and fresh entry is what she wants to take. So would you take the Ashok Leyland from the auto space at this point in time, or is Ashoka Buildcon looking good on the technical charts?
See, out of these two, I have to pick. Then I would like to go with Ashok Leyland. The counter is looking very strong on the chart. It has almost hit a new record high. In fact, it was shy away from hitting a new record high yesterday. Today. So today we have seen some profit taking at the high levels. See, positionally, Ashok Leyland within Auto Pack is having a very strong structure. And if it breaks about 256 levels on the upside, then the next target would be somewhere around 280 to 300. So Ashok Leyland is something that one can look for. Keep buy in multiple tranches. This particular counter has a potential to test 280 to 300 from short to medium term perspective. And if you are buying at current level, then keep a strict stop loss at 238. And yes, it's a buy. Now coming to Ashoka, see comparatively the structure out here is looking more sort of a sideways, and purely from a trading perspective, I think one can take a contra bet keeping a stop loss below 199. Purely just to play a pullback towards 220 to 235 can be seen on the chart. But positionally, I do not see any clear trend in this particular counter, so it's an avoid.
It's an avoid. Okay. I hope this has helped you out, Gunjan, in identifying how to go about the key stocks you've asked. Let's take a few questions on our WhatsApp. Many of the viewers are joining in there too to send me their questions. We'll take the first question from Naman Diora. He's from Kolkata. Hi, Naman. The question is on ITC from the FMCG space. He says that he has just bought this stock yesterday before the markets closed, and he wants to know both fundamentals as well as technicals for the next 3 to 2 months time frame on ITC.
Right. So ITC is a slow mover. Do not expect any big spurt in this particular counter. We have seen a lot of consolidation in the past couple of months now. If you see since February, the stock is stuck in a very tight range. On the upside, 435 is acting as a very strong resistance. On the lower side, immediate support, if you see, is placed at 410. So if you have bought it yesterday, then keep a strict stop loss at 410. If you see any pullback towards 425 to 430, use that pullback to exit and book profit, because it's a very trading in a very narrow range as of now. From 2 to 3 months perspective, I think the stock has a possibility of testing 435 to 440 levels on the upside as well. So one should look ITC in the from a positional perspective and can be added in the portfolio, but time horizon should be 8 to 12 months plus kind of time horizon. And from a trading perspective, as I mentioned, 410 to 435 is the range for this particular counter.
Okay, fair point. Let's take another one then. This question is from one of our viewers again on our WhatsApp. We will take. This is from Teja from Nillore. Teja wants to know that on Nalco, sir, what is the view that you have? If I have a 10-year time frame, can I actually go on to invest 5 lakh rupees in Nalco? That's the question that's coming in. So a time horizon as large as 10 years and a quantum of 5 lakh rupees to be invested in one stock. Would you advise that, and that too on Nalco?
See, first of all, if you see this counter 10 years back from here, so in the year 2015, it was trading somewhere around 20 rupees. So we have already seen multi-bagger kind of return in this particular stock. So yes, there is possibility of counter to deliver 20-25% kind of CAGR in this particular counter over the period. So at present, the stock is moving more sort of a sideways. Now we have seen a lot of selling pressure in the metal space amid tariff war that is going on. So keeping that in mind, from a short-term perspective, I believe the stock may test lower levels of 160 or 150 as well. So you may get a lower level, lower entry price in this particular counter. So buy in multiple tranches. 5 lakh rupees can be divided into 5 equal tranches. And yes, it can be added in the portfolio from a longer term perspective. 8 to 10 years is a very big time frame. The stock has a potential to deliver 20 to 25% as I mentioned. But keep a strict stop loss if you are buying in multiple tranches. That 120 is the very strong support. So keep that in mind. And yes, it can be added in the portfolio for a long term time frame.
Okay, fair point. I hope this has also helped you out in getting a clarity as to how to go about it. Taking the next one. This one is from one of our viewers on our YouTube again. This is Amir Ali. He says, hi Sakshi. Hi Amir, how are you? The question is on NHPC. That's from the power space. The question is that I have 1000 shares. The price at which I bought it is 96. Can you please advise whether I can continue to hold or should I exit? The stock has come down from your buying level. It's currently trading at 88. Nilesh, what would you advise?
See, I think he must have bought it long time back, because 95, 96 levels was last seen in the year 2024, approximate 1 year back, I would say. So we have already seen a good time-wise correction in this particular counter. At present, the stock is making an attempt to witness a positive move. So yesterday, in fact, day before yesterday, we have seen a big spurt all the way from 85 to 88. So there could be possibility of a follow-up move towards 95 to 100 from a short-term perspective. As of now, one should keep a stop loss at 84. So that's 4 rupees lower from current market price. The stock has a potential to test 95 to 100 in next 2 to 3 months.
Okay, fair point. I hope this has also helped you out in getting a clear view. Taking the next one, then. This one is from one of our viewers, Satyan. He says, I have many banking and NBFC stocks in my portfolio, but some of them have underperformed. I want to know whether I could continue to hold on to them or should I exit. The first one is Karnataka Bank. Price at which he bought it is 200 levels, and the second one is IDFC First, which he bought it at 68, and he wants to know what should be the strategy on both these banks now.
See, out of these two, KTK Bank is looking weak on the chart. So here my advice would be if you see any pullback towards 195 to 200, even if your price comes back, use this pullback to exit from the long position in KTK Bank. Structure is looking more sort of a sideways to weak. We may see this consolidation with negative bias to continue. Now, on the other hand, IDFC First Bank, see, we have also seen a lot of underperformance in this particular counter as well. It has fallen all the way from almost 100 in the year 2023 to 50 rupees last year. So overall, we have seen more than 50% correction in this particular counter. But good part is that from the lower levels, the stock has started moving higher. So you can stay put since your entry point is quite a lower price at 68 rupees. So keep a stop loss at 74 as of now and ride this momentum. I believe that the stock has a potential to test 82, 85 or maybe 90 from a short to medium term perspective.
Okay, fair point. I hope this has answered your question well. Taking the next one, then. This one is from one of our viewers, Ratna Prabha. Ratna Prabha wants to know about Lupin. She holds about 23 shares. The average price is 2,110. And the question is that I have been holding it since 1 year. I want to know whether I should average some more stocks at the current level. The pharma stocks overall, a view if you could share, Nilesh, from your end, and a view on Lupin also.
Right. So first of all, we have seen announcement from the Trump over 200% tariff can be levied on pharmaceutical space. So that's a kind of a negative sentiment we have as of now on pharmaceutical space. As far as Nifty Pharma Index is concerned, we have seen a good momentum. This particular index is trading well above all long-term and short-term moving averages. So there could be possibility of a gradual up move to continue. In between, we may see some selling pressure amid negative news on the global front. But overall, the undertone is on a positive side from a positional perspective. From next 1 to 2 year point of view, I think the pharma stocks, specifically large cap counters like Sun Pharma, Glenmark, Divi's, these are the stocks that can be added in the portfolio. Now, coming to Lupin, see this particular stock, in fact, comparatively it has underperformed and the structure is also not looking that promising. I would advise to better shift your position from Lupin to Glenmark or maybe Divi's Lab, Dr. Reddy. You have better options available within this space. If you want to remain only in pharma, then. Lupin, if you want to continue to hold, then keep a stop loss at 1860. And if you see any pullbacks toward 2000, 2100, use this pullback to exit. If you want to stay put for a longer term time frame, yes, then you can probably stay put. The positional structure is looking positive.
Okay, fair point. I hope this has answered your question well. The next one is from one of our viewer, and this question is from Arun Kumar Gupta. And Arun Kumar Gupta says, is it the right time to enter Tata Technologies and ITC Hotels? What's your view? Tata Tech is something that's been a laggard since the time that it got into a listed space from the IPO, and ITC Hotels is the demerged entity from the hospitality space. How would you look at both these stocks?
See, out of these two, ITC Hotel, although we have a limited data, it's a recent demerger that we have seen in the month of January 2025. But ITC Hotel is looking strong on the chart as well as fundamental. We all know that it is backed by ITC Group. So ITC Hotel is looking strong on the chart, can be added at current level. But since it has surged a lot in past couple of trading session, so better buy in a staggered manner. Stock has a potential to test 260, 300 kind of levels on the upside. So wait for some bit of correction on the back of profit taking. Use that correction as a buying opportunity. Keep a stop loss at 210 and target would be 260 to 280. Coming to Tata Technology, this has been one of the underperformer and still the structure is not looking that promising. If you want to play pullback, then you can buy, keep a stop loss at 670. Pullback may take this counter towards 750 to 800, but we are not expecting any V-shaped kind of recovery in this particular counter. So as of now, it's an avoid from a position perspective. From a trading point of view, with a strict stop loss, it can be bought.
Okay, fair point. I hope this has also, helped you out in getting a clear sense as to how to go about it. 12:27. I think it's time to get Nilesh to talk about his own choice of stocks as well. Nilesh, we have been seeing a lot of consolidation play out in the markets. Is it making it difficult to really spot the stocks, or do you think there are enough stock opportunities, specific opportunities that investors can look at?
See, Sakshi, as I mentioned, the markets are in a consolidation mode and we are expecting this consolidation to continue. We have seen a lot of, we are expecting time-wise correction to continue. Now, in this kind of, truncated market, in this kind of a weak market, although it is difficult to find quality stocks which are giving momentum, but yes, there are few opportunities in few selective space like AMC space. If you see HDFC AMC, UTI AMC, in fact, all these stocks have given a good momentum. Now, within this space, one particular stock that is looking very strong on the chart, NAM India. So, NAM India, that is Nippon Life. This particular counter has given a multi-month breakout today and looks strong on the chart from a positional perspective. It has given a good multi-month breakout today. On the upside, we can expect a follow-up move towards 860, 880 or 900. One can keep a stop loss at 770 and NAM India can be added on declines and also can be added at current level as well.
Okay, got that. I hope viewers, you've taken that down from Rich's list of stocks, Nilesh's list of stocks there. Thank you so much, Nilesh, for sharing your views on all the stock queries that have come onto your way, patiently answering all the questions from our viewers. Always appreciate your time with us on Business Today Television, so that we can continue to get you back and stay with us. And of course, I hope you have a fantastic weekend upcoming, and we'll see you very soon. Another edition.
Thank you, Sakshi.
All right, viewers, now Richard Jain